A banking crisis has developed all over the world. We saw the cracks appear in 2008, and this is now continuing on, and it is particularly evident in Europe, where we have many countries unable to pay off their debts. So what are they doing? One by one, they are struggling to pay, and there are many countries, including Portugal, who I'll talk about today, who are facing the possibility of default. Portugal banking crisis sends tremors through Europe. This was an obvious thing just a few days back, where they were talking about how this is a really big problem and is the crisis really over, and so on and so forth. So this bank here, Banco Espírito Santo, had a decline in its share price by 17%, a significant drop for Portugal's biggest bank in terms of its assets. And they're saying that this is a concern for Europe's health. Is Europe really doing well? Well, in my book, I talked about how Portugal had to accept a $37 billion loan from the IMF. And then what I said was that this isn't going to go to the people of Portugal. It's going to go to people who own the Portuguese bonds. And what I mean by that is the bankers. It always goes to the bankers, never goes to the real people. And you can see that when in the US, as an example, where the people are still in debt, more in debt than ever, yet the bankers run scot-free. Portuguese bank reveals exposure after missed payment shakes the markets, reassuring the investors by revealing its exposure to the related companies after a missed payment on short-term debt. They said, have no fear, we're not going to default. Take a look at what we have, will be transparent for you, so on and so forth. And right here, we can see that the banks in Portugal have instantly decreased the amount of borrowing that they're doing from the ECB. Now, why would they do this? They fear a default. They are concerned about it, so they instantly become more reserved. So let's go on quickly. Espírito Santo creditors doubt containment on missed payment. This is an article out of Bloomberg, and basically said that the central bank assurances on Portugal's bank is protected after the parent company missed short-term debt payments, and they're failing to ease the creditor concern, so on and so forth. So basically, even with the central bank coming out there and saying that they will step in, they will be there to basically backstop any problems, it did not assure the creditors enough. And this is something that we need to think about for the Fed, because the Fed is there to backstop anything that happens in the US. But when it all is really said and done, will it stop the inflation? Will it stop the bank runs from occurring? And you see where I'm going with that. Essentially, the reality of the situation is that it will not. So let's go on. They have said specifically that there is nothing to worry about, 4 reasons to keep calm, an article out of CNN of all people. And let's just go very briefly through this. Number 1, they said it's a local problem. Don't worry about it. Nothing to see here. Number 2, I'll scroll through. Number 2, regulators are on the case. Have no fear. What about when they had all sorts of problems with the SEC in the US? We'll investigate. Don't worry. And then they let everything through. Why? Because it's all controlled by the same enemies. Europe is getting its act together. So yes, while we have such major problems, don't worry about it. Europe is getting its act together, according to CNN, and Portugal is in better shape. They are saying that nothing is a problem in Portugal and in Europe. Everything is just fine. Now, if you believe any of this, then you are simply one of the sheeple. Let's get to the reality here, and that is that Europe is very weak. Of course, the US is weak as well. This is the whole worldwide economy. They all print in a race to the bottom. That's what they're doing. They've brought interest rates down extremely low. They're printing trillions of dollars all around the world. Everyone is trying to export their inflation out to other countries, and the simple matter of fact is that this does not work. They have expanded beyond what they can do. Europe itself is a failure, or I should say the Eurozone is a failure, because they try to force everyone on to a single currency, onto a single interest rate, and it doesn't work. They are failing badly, and you can see the cracks appearing right now. And what concerns me is that this will make its way back to the US, because ultimately the Fed is the only thing supporting the economy. But take a look at what a Portuguese bank, such a small bank in real terms, look at what happened in the world. It actually sent the whole world's markets down. Even though it had such a small impact on the whole world, it actually caused the market to drop significantly and meaningful. So you can see that what will happen in Europe will affect the whole world. That is globalization. That's how this works, and that is what concerns me. If you want the best intel, you need to be an insider. It's totally free. It's at themoneygps.com. You fill in your email address at the bottom of the page there, and you get occasional emails from me with short, concise info.